A brick-and-mortar car wash can look like a simple cash flow business. It has real estate, physical equipment, and cars coming through every day. But when experienced buyers evaluate a car wash, they are not just asking, is it a busy location? They are asking, how much cash flow is real? How risky is the location? And what exactly am I paying for? Let's start with the earnings. Across the broader market, BizBuySell's current car wash marketplace shows a median asking price of $1.2 million. It also shows typical asking multiples around 2.07 times revenue and 5.80 times owner earnings. That matters because buyers are not really paying for concrete, walls, and wash bays alone. They are paying for the income stream those assets produce. So even when the deal includes real estate, the first question is still, what does this site actually earn? Take this current example from Denton County, Texas. A self-serve car wash with real estate is listed for $150,000 with $62,000 in cash flow. The listing describes it as a self-serve car wash with prime real estate in Northwest Dallas. Now do the basic math. $150,000 divided by $62,000 equals about 2.42 times cash flow. That is much lower than BizBuySell's current broader median asking multiple of 5.80 times earnings for established car washes. On the surface, that makes this deal look cheap. But smart buyers can't stop there. A lower multiple can mean opportunity, sure, but it can also mean the market sees risk. For a freestanding brick-and-mortar wash, buyers need to ask, how old is the equipment? How much deferred maintenance is hiding in the site? Is traffic strong enough to support the location? Is the wash still competitive in its trade area? And how much capital will be needed after closing? That is especially important because a smaller self-serve site is not the same as a high-volume express tunnel wash. The revenue model, scalability, and buyer pool are different, which can justify a lower multiple even if the price looks attractive. That broader market range is visible in BizBuySell's current asking multiple bands, where car washes span from 3.24 times to 8.25 times earnings. After the first pass math, smart buyers look at what makes the income durable. First, site quality. A freestanding wash has value because of access, visibility, traffic, and layout, not just because it exists. Second, real estate versus business value. When real estate is included, buyers need to separate what they are paying for the land from what they are paying for the operating business. Third, replacement cost. A current BizQuest listing for another owner-operator car wash with real estate notes that building a new car wash site can cost $400,000 to $600,000 or more, not including land. That does not set market value by itself, but it helps explain why existing sites can attract buyers even when they are smaller operations. The easiest mistake is to think, it's brick and mortar, it includes real estate, it's cheaper than others. And maybe it is a good deal, but smart buyers still want proof. Tax returns, utility history, repair history, equipment age, and a clear view of how much cash flow is actually transferable. Because a freestanding wash with weak equipment, inconsistent income, or future CapEx can be far less attractive than the asking price suggests. So when smart buyers evaluate a brick-and-mortar car wash deal, they focus on three things: real cash flow, real asset quality, and real risk. Because even when a deal includes land and a physical site, you are still buying the same thing, a stream of income. And your job is to decide how dependable that stream really is.